Hi. During 2008 global financial crisis, our Indian market fell by 60%. Within 2 years, the market fully recovered. Again in 2020, during COVID crisis, our Indian market fell by 40%. And after that, within 1 year, market recovered and one of the biggest bull market continued until 2026 end. What I wanted to share here is that both these crises were global crises, be it global financial crisis and COVID. Like all other global market, our Indian market also fell. When this fall was happening, as we looked at our portfolios, we felt that we should move all our assets to safe assets, maybe FD, buy gold. That was the thought process, and it is difficult to see portfolio falling. But once that event is over, 1 year, 2 year down the line, we always wish we had invested more during those falls. We think this time also, as the war is continuing, lot of uncertainty and portfolios are falling, we may have the same thought, I wish I could move this money to a safer assets and can I protect the loss? And in this process, we end up forgetting the goal for which we are saving, and we forget about the power of compounding. All the important things which we need to remember to get our investment strategy right, we may not recall at this point in time because the news is so negative and portfolio correction is kind of putting us in discomfort at this point in time. Remembering 2008 crisis, Lehman crisis, global financial meltdown crisis, all led to the 60% fall, and COVID fall. All that, if this is the time to recall and remember that if such a fall happens, future recovery will follow. Keeping this in mind, it is not the time to panic. It is time to be more careful and focus on asset allocation, focus on our goals. At this point in time, the important thing to remember is our goals, our future for which we are building the portfolio today, not to get carried away by the current uncertainty. Yes, it is difficult time, very difficult to predict and plan accordingly, but as long as we are sticking to our goals, we can go through this phase as well, and 2 years down the line we will think that was a good opportunity to invest more. As we speak, we continue to engage actively with fund managers and we are tracking your portfolio regularly, and we strongly believe this is the time to do more lump sum, increase the SIPs, and also we are doing the switches for last couple of weeks consistently, and we are, as I said, we are actively tracking the portfolios. If you have any concern, you can reach out to our team. We'll make sure that the portfolios explained it to you. We strongly believe India's fundamentals are stronger and it will continue to become stronger because of global uncertainties. Government's policies will make their country more stronger because we have to become more self-reliant, and our demographics and long-term fundamentals are unchanged. So let us stay put and let's remember power of compounding, and let's remember that we are saving for our goals. We will get to the goal. That is more important than worrying about current uncertainty. Thank you for listening. Please feel free to reach out to us if you need any clarification. Thank you for trusting Singularis.